Hi there, welcome to Kneppy Invest. I typically am not dismissive of any company that is listed on the ASX. And I do know some investors will refuse to buy into any company with a market cap of, say, less than $100 million. Even some refuse to buy into companies that have a market cap of less than $1 billion. However, I am willing to look at every single company that is listed on the ASX, no matter the size of that company. They could have a market cap of $1 million, and I am able to find some sort of positive investing thesis around that company. And the reason I'm talking about this right now is because the company I am featuring in today's video has a tiny market cap of only $15 million. Now, in saying that, this company, Advanced Braking Technology, or ABT, is profitable, is growing, and generating cash flow in their business. For full disclosure purposes, I am not a shareholder of this company. In fact, even though I have been loosely following this company for about 10 years now, I have never really thought about taking position in advanced braking technology. However, the success this company has had over the past few years makes me more likely to take a position in this company if I continue to see the current growth this company is experiencing right now. So I'll never put any company on the ASX off my potential buy list. Advanced Braking Technology is a manufacturer, supplier, designer of advanced brake systems. It's virtually in the company's name, Advanced Braking Technologies. Company's based out of Perth, and they do have customers or clients all around the world. In fact, on their website, they mentioned they have supplied brakes to all 7 continents. And the type of applications and the type of sectors they have customers in are or include the mining, civil construction, military, freight, agriculture, and off-road vehicles. They also provide brakes for heavy trailers, autonomous vehicles, electric vehicles. They also have fail-safe emergency braking and hill hold park brake systems. The current CEO of Advanced Braking Technology is Andrew Booth. He doesn't have experience within this sort of technology, but he does have quite a bit of management experience, particularly corporate development, which is quite important for a company like Advanced Braking Technology, and strategic leadership. And that's very important for this sort of company. He has extensive experience across banking and finance, advisory, private equity, agricultural, FMCG, and logistics within the Asia Pacific region. And before he joined Advanced Braking Technology, he managed strategy and governance across 34 countries for ANZ and Asia Pacific development. He also has a master's or MBA from Australian Graduate School of Management. So this is sort of a strategic hire to get someone who knows all about corporate development and strategic leadership. Now onto the quality of advanced braking technology. And this is a very important step for me when I am researching a company. I want to determine if a company is low quality or high quality. It's very important to note as well, because I just remembered it, that if I determine a company is low quality or high quality, doesn't mean that they can't make the transition. In fact, the sort of company I am looking for is a low quality company right now that is trying to make and successfully making transition to a high quality company. And the sort of companies you don't want to invest in are those high quality companies that are sort of losing their high qualityness and becoming low quality. And that happens to most companies, or has happened to most companies through history. Even the highest quality companies we have ever had in the world have eventually withered. Won't say died, but they definitely have withered and become low quality companies. Now, I'm not saying or suggesting that advanced braking technology can make their transition from low quality to high quality, because I definitely wouldn't say this company is high quality just yet. But they do have some things going for them that suggest that potentially they could make that transition in the future. Now, the things I am looking for in determining whether a company is high quality or low quality is revenue growth, return on invested capital or return on equity, I don't really look at valuation metrics. I'll talk about that later in the video. But those are the three things I mainly focus on. Also look at gross margins, but and I try to focus on high gross margin companies. But there are some high quality companies with low gross margins, and a perfect example of that is Costco. So let's have a look at the revenue growth and return on invested capital for advanced braking technology. Now, revenue growth over the past 10 years is actually negative 7.2. But the revenue growth has turned around over the past few years. And in the past 3 years, advanced braking technology has grown their revenue by 5.3% per year. Now, it's very important to note, this is not revenue growth. This is actually revenue per share growth. And the reason I use revenue per share growth is I want to absolutely eliminate capital raisings. Because sometimes you will see a company grow their revenue at pretty good rates, but they're actually increasing their shares on issue at an even greater rate than their revenue. And I don't want to invest in those sort of companies. Return on invested capital right now is 16.6. Now, when I look at return on invested capital, I'm just not looking at the current number. I'm looking at the history as well. And a return on invested capital of 16.6 is the sort of return on invested capital number I am looking for in a high quality business. So anything above 10, I would say it is more than likely going to be a high quality company. Not always, but more than likely it will. EV to EBIT. So I do look at valuation metrics quite often as well. And the EV to EBIT for ABT. And the reason I'm using that is because I do know of a few fund managers who do favor EV to EBIT, and I understand why they do use that as a valuation metric. I don't use it a lot, but I still do look at it. And for advanced braking technology, it's 9.4, which is on the low side. So I'm looking for numbers less than 10 when it comes to EV by EBIT. And another thing I look for is the total return of a company over the past 10 years, if it's been listed on the ASX for 10 years. And this includes capital growth, so share price increasing or decreasing, and also includes dividends. And the total return for ABT over the past 10 years is negative 11.6. So after all these research, looking at all these numbers, I've determined that this company is a low quality. And the main reason behind that is just a lack of growth over 10 years, even though the company does seem like it's turning things around, and also the total return over the past 10 years is negative as well. The very fact they have return on invested capital at 16.6 makes me think this company has something going for them. So even though I would have determined this company to be a low quality company, I have put it onto my low quality watch list, which means I think there is potential this company can become a high quality company. Not tomorrow, not in a month, probably not even in 1 or 2 or even 5 years, but potentially in 10, 20 years, this could be a high quality company. And I also make notes when I do this for every single company, and I have it in an Excel spreadsheet. So I've mentioned they've reached the profitability, or I've questioned whether they've reached the profitability inflection point, because this company is profitable, accelerating revenue and profitable, good return on invested capital, and not too expensive. Now to a few facts in regards to advanced braking technology. Company has been around for a little bit of time, and all these numbers, share price, market cap, is from April 14 when the share price was 4.1 cents. Current share price on May the 3rd at 3:33 p.m. May the 3rd at 3:33 p.m. is 3.9 cents. So that means the market cap is a little bit less than 15.6 million. But these are the other facts in regards to this company. Listed on the ASX in May 2002. So it's been around for 20 years, but back then it was known as Safe Effect Technology. I don't know the history. I don't know if the technology, advanced braking technology, has right now was in place back then, or maybe a Safe Effect Technology made an acquisition. So I haven't done that amount of research in regards to this company just yet. Shares on issue, 379 million. 10 years ago, shares in issue were 133.6 million, which means this company has done a few, well, maybe I shouldn't say a few, but at least one capital raising over the past 10 years. In fact, shares on issue have tripled over that time. Hopefully, with the company being profitable and generating cash flow, they won't have to raise much capital in the future unless they do or make an acquisition. And the current market cap, well, on April the 14th, the market cap of the company was 15.6 million. So if this company can continue to grow, continue to be profitable, continue to generate cash flow in their operations and free cash flow as well, you'll probably say that 15.6 million valuation is on the low side, and probably not hard to understand that this company does not give any dividends to the shareholders just yet. Just yet is the main thing. If this company starts being a dividend paying company, that would probably lead to sort of a realization that this company might be cheap. And also, they would probably be thinking they can remain being profitable for a long period of time. Now, let's have a look at the financial state of advanced braking technology. This is a trailing 12 months. If you don't know what trailing 12 months is, it takes the last 6 months, so the first half of financial year 23, and just adds it on to the second half of financial year 22. So we're just looking at the financials of the company over the last 12 months, and this is up until the end of 2022 because we're in the first half of calendar year 2023. So we don't have any numbers for this half just yet because we're not any way through it. So we're May, we have 2 months to go before we have the first half of this calendar year, which is the second half of most companies' financial year. Anyway, rambling on a little bit. Revenue of $12.8 million. So that is on the low side. So this company is small in terms of generating revenue, but they do have pretty good margins. So with that $12.8 million of revenue, they were able to generate $1.3 million of profit. And this company was operating cash flow and free cash flow positive. I would like that to be a little bit higher, but free cash flow positive by $580,000. Return on equity, 23.4. And I've already mentioned return on invested capital, 16.6. A lot of investors and a lot of fund managers look at return on equity. I favor return on invested capital because that takes into account debt and it tends to be a little bit more conservative. So I'm going to be just a little bit more conservative when I'm deciding whether a company is high quality or low quality. So those are really two good numbers, which tells me this company has a product that they are selling that they can sell at pretty good margins and they can get pretty good returns on this product in the future if they maintain that sort of return on equity and return on invested capital. So the sort of returns I could expect from this company per year is around 20%. And that's right now based off those two, return on equity number and return on invested capital number. Now let's have a look at the half year results for financial year 23 just to see how this company is performing. So everything is on the up. Revenue up 30.1%, operating revenue up 31.5%, increasing gross margins up to 50.4%. And I think there is also the potential they might continue to grow their margins from here. Total expenses only grew at 21%. So this company has reached a little bit of scale. So revenue up at a greater rate than expenses. EBITDA up 206% from a low base, 290,000. Profit up 476%, again, on a low base. If they were able to grow their profit by 476,000 from 770,000, which would mean that their profit's going to be, what's that, something like, we'll times that by 4, close to $3 million in one half. A market cap of $15 million is absolutely ridiculous. Operating cash flow up 112%. And cash equivalents up 36%. So all the numbers are moving in the right direction for advanced braking technology. And the company also issues Appendix 4C. So we can actually see how this company is performing on a quarterly basis. And this is their most recent March quarter. And I actually did wait for this company to release their March quarter before I did a video, just because I knew they were going to release it and I just wanted to include this in this particular video. And everything is still moving in the right direction for advanced braking technology. Receipts up to $3.3 million. And even though the company did receive $429,000 of government grants and tax incentives, if you take that away, they were still operating cash flow positive by just over $100,000. And for the first 9 months of the year, they have been operating cash flow positive by $1.1 million. So it does seem like financial year 23 will be a better financial year for this company compared to financial year 22. Receipts of customers up to almost 11 million. So I think there's a chance, a pretty good chance, that revenue for financial year 23 would be, say, about $15 or so million. So that's pretty good growth on 12 million. So talking about 25% growth just in revenue. Now onto the revenue history for this company. Not only revenue history, this is the profit history as well over the past 10 years. So even though I've been following this company for about 10 years, I've only really become interested in advanced braking technology. And when I say interested, I'm not willing to take a position just yet. I need a little bit more confirmation that the revenue growth we have seen in the last 3 or so years can continue. And not only have they grown revenue over the last 3 years, this company has transitioned from a loss-making company, the reason why they had to raise capital, to a profitable company. And that has been in the last 3 years. So things are moving in the right direction for this company just based off the last 3 years. The big question is, can they continue this momentum over the next 3 to 5 years? Now to some other valuation metrics for advanced braking technology. We already looked at EV to EBIT, which is on the low side, a number that I am willing to say or argue that there is some merit in calling this company on the cheap side. So I always look at PE ratio, price to operating cash flow, price to free cash flow. Sometimes I look at EV to operating cash flow or EV to free cash flow. And when you do look at some of these numbers, particularly the PE ratio, it is on the low side. So PE ratio is 11.9. And to be fair with you, if they can continue to grow their margins, their gross margins, continue to grow their revenue, I wouldn't be surprised to see a profit increase of say 100 or 200%, which means if the share price doesn't increase from here, the PE ratio for the company would be say 5 or 6. That's if they double their profit. Price to sales ratio 1.2. Price to operating cash flow a little bit higher than the PE ratio. I would prefer that to be a little bit lower, but I think there is also significant, well, maybe not significant, there is potential that the operating cash flow, free cash flow can grow significantly from the financial year 22. Also did a reverse DCF based off the earnings per share. And for the company to justify their current valuation, they would have to grow their earnings by 6.6% per year over the next 10 years. And I definitely think this company can do that. And I think a way to play advanced braking technology is to take a basket of similar companies. And when I say similar companies, I'm not meaning similar companies in the sector. I'm talking about similar price companies that may be slightly profitable, that are growing, that have potential to grow in the future. So if you took a basket of, say, 15 or 20 of those sort of companies, there's a high chance that maybe 7 to 10 of those companies will be successful in the long run. Now onto the weekly chart for advanced braking technology. This goes back to the middle of 2019. So we're talking about almost a 4-year period. And you notice that the candlesticks are on the low side of this chart. And I was wondering why the trading view chart system, whatever, wasn't zooming out. And then I realized there was 1 week here in July of 2020 where the share price of advanced braking technology reached a high of 13 cents. During this whole period, the share price has been oscillating between about 5 cents and between about 1 cent and 2 cents. And in the past 3 years, it's been oscillating between 5 cents and 2 cents. But there was 1 week where the share price reached a high of 13 cents. And this was on 1 day of trading. On the 3rd of July, 2020, the share price opened at 4 cents, went to a high of 13 cents, and then closed at 3.4 cents. That's one of the most astonishing 1-day candlesticks you will ever see, on not only on the ASX, but probably worldwide. So at one point a day, the share price was up from open about 300 or 400%. And then from the high to the close, the share price was down about 75%, if I'm doing my maths right, which there's a chance I'm doing it wrong. Now, I went back in time just to see what caused this very short-term excitement in this company. And they did release an announcement titled ABT, Licenses a Braking Solution for the Fails Australia Hawkeye PMVL project. I'm still a little bit wondering why this announcement caused so much excitement for a very short period of time. It could have just been day traders who got a little bit too excited, because remember, back in, say, the middle of 2020, a lot of people were trying day trading, that sort of thing. So that could have been one of the reasons why it was the day traders got a little bit way too excited. But anyway, since then, trading in advanced braking technology has been pretty boring. Share price going sideways, again, oscillating between about 2 cents and 5 cents. And the current share price is sort of in between, well, not exactly in between 2 and 5 cents, but right now is at 3.9 cents. The next video I plan on doing in this series, Kneppy's analysis, is on Santos. I've already prepared the video for that, or the information, the research for that video, but more than likely I might release that video in a week or so. I'm excited to bring you Santos because, believe it or not, I am an ex-shareholder of that company. I was a shareholder for that company, or of that company, for about 5 months in 2017. So for those who are listening to this, maybe go back to the chart and have a look at what the share price did, particularly in the last 5 months or 6 months of 2017, and look where the share price was just previous to that. So I'll talk about why I took a position in Santos for just a 5-month period. And the other 4 companies, or the next 4 companies after Santos, will be Iris, Parenti, Mass Group, which was a suggestion from a viewer of this channel. So if you do want me to cover a company in this series, just leave a recommendation in the comment section of this video. And Clover Corporation, another company I've owned in the past, but don't own right now. That's all I have for this first look. First time I've covered advanced braking technology in this or on this channel. And if you are a shareholder of this company, I'd love to hear your thoughts on why you've taken a position and your thoughts of the future of this company. More than likely, you are bullish on the future, because if you're holding this company and you're bearish on the future, that would be absolutely silly. So leave your thoughts in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.